Hi everyone, my name is Jennifer Vang, and today I'm going to present to you the earnings from Disney for Q4 in the year of 2025. So we're just going to go ahead and we're going to get started on today's presentation. So, just to give you some background information, Disney released this report on Thursday, November 13th, 2025. And in this report, they reported their Q4 earnings, which was from July 1st to September 27th. And they also reported their full year end. So, that was their entire year for 2025 and how they did. Their chief financial officer, Hugh Johnston, actually reported that overall they're leaving this year with great momentum. And this was in regard to Disney's streaming and experience businesses. So streaming refers to like Disney and Hulu Plus. Maybe you've heard of those particular streaming services before. And some of the experiences would be like their theme parks in domestic and international seas, plus resorts and cruise lines. Moving forward, some of the key finance information for Disney of this year was their earnings per share was actually higher than expected. So their adjusted was $1.11 and $1.05 versus $1.05. And this was just, something that the company did well in. In terms of revenue, though, it was a little bit lower than expected. They instead experienced 22.46 billion versus 22.75. So it was a little bit lower, but if you take a little bit closer look at the numbers, you'll see that the operating income for the segment was actually up by 13%, and the revenue for the experiences segment was actually up by 6% too. And then towards the end of this report too, the board for Disney had declared a cash dividend for $1.50 per share, which would be payable in two installments of 75 cents per share starting next year in January. Moving forward, some of the challenges that Disney faced in 2025 was a carriage dispute with YouTube TV regarding the ESPN streaming. For a while, Disney was going dark on YouTube for ESPN streaming, and I think it was recently that they finally came to a proper conclusion for that and how they would like to proceed moving forward. In addition, Disney kind of fell through with some entertainment, particularly in their movies and some linear TV networks, such as like the release for Snow White or Elio or the Lilo and Stitch movie. That kind of fell down with their consumers by 6%. There was also a decline in advertising revenue due to lower rates and political ad spending and a decrease in average viewership too. So these were some challenges that Disney faced, along with maybe some economic uncertainty in terms of like inflation and how this might affect future demand for consumers. But moving forward, you can see in this little chart here, I divided it up with like a little red line to show you the difference between the quarter end and the year end. But there's like, key things that, you could see with like their revenue, their diluted EPS, their income, and their free cash flow and their operations income. These were some very key changes that, Disney reported for their fiscal year. And feel free to pause the video too to kind of read it a little bit more thoroughly. But I thought it was a great example of what we've learned in our classes recently too. I'm also going to show you the summarized segment for financial results. I added some arrows to kind of show you, what they saw an increase in their quarter compared to like last year's quarter in 2024. There was an increase in revenue for sports and experiences and a decrease in entertainment, like we just mentioned. The same as like a little bit for their operating income too. There was a decrease in entertainment and sports, but experiences are doing very well. Moving forward too. Some of the goals that Disney is trying to push forward for the 2026 fiscal year is that they're planning to boost their dividend and double its share buyback plan. So, in some ways, Disney is planning to buy back some of their shares that they have released out into the market. They'd also like to have an operating margin of 10% for the entertainment sector. So, they're trying to boost that up as soon as possible. In addition, they're introducing two new cruise ship lines, the Disney Adventure and Disney Destiny. So, hopefully, that'll bring in some more revenue for their experiences unit. And then they also have future really promising future movie lineup such as The Devil Wears Prada 2, Toy Story 5. Hopefully that will also help boost up the revenue for the entertainment sector. They're also planning to also go into a little bit more of the $19 billion cash provided by operations and also $9 billion for capital expenditures. Overall, too, the message from the CEO, he sounds very confident in how Disney is going and towards of their financial future. Definitely take a minute to pause this slide too and to read the quote by Robert Iger. He's the one that he's kind of leading Disney, and he is definitely feeling like it's a promising future for the business and their financial health. So I do have some thoughts too. If you guys have any, responses for my particular presentation, I do have some questions on what your thoughts or views are. And if you agree that Disney had a strong fiscal year, definitely let me know in your Canvas replies, and I would also love to reply back to you. Thank you so much for watching my presentation. I hope you enjoyed, and I also have the references here for you if you are interested in reading the article. Thank you.